Hello everybody, my name is Christian Charlo. Welcome to this market report. Today we're Tuesday, November 4th, 2014. Today folks, I want to talk to you about a movement that we have in the energy sector after Saudi Arabia decided to cut its oil prices simply to keep market shares in the US. So it's Saudi Arabia, one of the largest oil producer, that cut its oil prices. Well, we had a clear bearish cycle in oil and bearish cycle among the energy sector though. And we had several breakdowns that we published since this morning on marketgurus.tv that you can have access for free for 10 days just by clicking at the link below. So today, the chronicle is going to be about energy stocks. What strategy can you favor to benefit from the fall in oil and from the fall in the energy stocks? And what type of stocks that you should favor to short and the ones that you should not favor to short. So let's start. First of all, we have oil here. Actually, it was on the verge of starting a bearish cycle yesterday. It did during the end of the day. Now it's just a pursuit of the bearish cycle in oil. So there are some ETF, bearish ETF, that allows you to benefit from the decrease of oil. And those two bearish ETF that are really active are this one here on the TSX. It's HOU. So I think, it's HOD. I'm sorry, I'll put that one here. It's the bad one. So HOD on the TSX, which is a nice bearish ETF that allows you to trade that bearish cycle. So it was actually an entry point yesterday. Now it's still pursuing its rise. So as long as we maintain its upward trend, I think you can hold on to that stock and keep buying it. SCO2 as well, even if it's actually pursuing its rise, even if yesterday it was a breakout, I think you can still hold on to it and buy it as long as it maintains its upward trend. And for the energy sector on the TSX though, we have a clear bearish cycle. The only thing is, on the energy sector on the TSX, there is that support that's there here. So this is a support where we actually had a rebound around this area, a rebound around here. So that could happen though here too, because when we tested that rebound around this area on October 17, we had a rebound. So that might be a point where investors are starting to buy some energy stocks. So this is why I think that you should continue to be picky on the type of stocks that you choose to short on the energy sector. However, this bearish cycle here that started today could continue on the energy sector. And one ETF that allows you to trade that bearish momentum is that bearish ETF on the TSX, which is HED. Also, on the US, we also have a clear bearish cycle as well. It's not as strong as the one that we have on the TSX though, but still on the energy sector, to trade that bearish cycle, one thing that you can do is to trade that bearish ETF, which is ERY on New York Stock Exchange. And I think as long as you're getting into that ETF, as long as it stays above 17 bucks, it's still a position that you should hold on to, because the ETF will still maintain its upward trend. So those of you who don't want to buy ETF, there's another alternative, an alternative to short some stocks. First of all, I want to show you here a stock that we recommended on marketgurus.tv that you can have access for free for 10 days. And that stock is Enerplus. That stock was recommended on October 27, 2027 as a short opportunity on marketgurus.tv, because on October 27, the energy sector was just starting a bearish cycle. It was the first bearish cycle. Today, with this decline, what we did on Enerplus is we took some profit. So those of you who shorted the energy sector since October 27, I think that today on a lot of your short position, you should take some profit, and we did it on Enerplus. Today, what are the short opportunity? There's several stocks that are breaking down, but I think positions that you should avoid to short are positions like Chicken Wall Services. Why? Because first of all, the stock is already losing 7.21%. So 7.21% is from yesterday's closing to this price here right now. So technically speaking, when a stock is breaking down like that, usually you should get out whenever the stock reverses its downward trend. So if you're shorting that stock, your buying point, you should buy it back or close that position if ever the stock, let's say, reaches 1061, because it will reverse this downward trend. However, at 1061, from 934 to 1061, it's more than 10%. So imagine you're shorting a stock now, it's losing more than 10% of your loss potential. It's becoming too much. Also, you have to take into account that American markets, NASDAQ, Dow Jones, S&P 500 are still at their top. We have also some economic indicators that we're waiting next week, which might create some volatility. So this is also one of the reasons why I think you should continue to be picky though, and the type of stocks that you short. So on a stock like Chicken Wall Services, because it's losing, the loss potential is too great, I think it's a type of stock that you should avoid. But a stock that we actually favored on marketgurus.tv is that stock here, which is called Prairie Sky Royalties. And why we favored that stock is because the loss potential was not that great. To actually close that position, where we will have to close it? We'll have to close it if the stock breaks that resistance here. So around 35.67. So from 33.82 to 35.67, it's about what? A 5% loss potential. We actually have a probability to make 10% if the stock reaches around 30.50, but easily around 31.70. This is a point where we're going to recommend to take a first round of profit on a stock like Prairie Sky Royalties. What we also like with that stock is the fact that right now, the 10-day moving average is just below the 30-day moving average, which is a good sign that the bearish momentum is installed. Also, we have the stochastics here that is actually clearly leaving the overbought situation and heading towards the oversold situation. And we have some room to go before we reach that oversold situation. So because the loss potential is not that great, about 5% almost, because the indicators, stochastics, MACD, histogram are showing us that the bearish momentum is installed in Prairie Sky Royalties, this is why that stock is our favorite pick on marketgurus.tv that you can have access for free for 10 days. So today, folks, with Saudi Arabia that cut its oil price, several stocks are breaking down on the energy sector. I believe that you can trade that movement by either shorting some stocks or opening some positions on some bearish ETF. And the list of some bearish ETF here are all the ones you see that I'm highlighting with an S. And all those bearish ETF are key ETFs that allow you to trade that bearish momentum. I think you should avoid stocks that are losing more than 10% where the loss potential is too great. Favor stocks where at least you have a small loss potential with a higher reward potential. And I think this will allow you to have a higher probability of making some money to trade that bearish cycle. And our top pick of the day on marketgurus.tv is PSK, Prairie Sky Royalties, on the TSX. So that's it, folks. See you next week for your market report. This was Christian Charlo from marketgurus.tv. You can always follow us on Facebook, on Twitter, and I wish you a good trading.